This is Matthew Kratter from Trade University, and today I want to talk a little bit about deflation and the very bright Bitcoin future that we have in store for us. This is a follow-up to yesterday's video where I talked about future inflation in the US and how that would affect an ultimate nominal price target for Bitcoin. So I do encourage you to watch that video. I think if you're a Bitcoiner, you'll be very happy by the ultimate price targets that I come up with. But in this video, I want to talk about what does the future on a Bitcoin standard look like? This is a very big question, and so we're going to be tackling just a very small sliver of this. And in order to do that, we're actually going to take a historical journey back to 1789, which is when really the last of the Eastern Seaboard states ratified the U.S. Constitution. And the end point for our journey will be 1913, when the Federal Reserve, which is a central bank in the U.S., was set up in a very stealthy and unethical way. So this is approximately 124 years. And we can see here, this is a measurement of the purchasing power of $1 over that period. The average inflation rate over that period was very, very close to zero. It was just 0.1% per year. That's not 1%. That's not 10%. That's 1/10 of 1% per year, leading to total inflation over 124 years of just 12.5%. Now in 2022 in the US, if you were to measure the real inflation rate rather than the manipulated CPI number that the BLS puts out in the US, I'm sure that inflation just in 2022 was more than 12.5%. So it was just as bad as what you had over 124 years. So this was a very prosperous period. It was a period with some swings between inflation and deflation, and these swings basically canceled each other out because the US was essentially on a gold standard. So you had some booms and busts, but you certainly did not have real inflation. If we compare that to what inflation has looked like, even using the manipulated CPI number over the past 20 years in the US, we can see that the inflation rate has been really mid-single digits. We had the 2010s were fairly low CPI inflation, and then it's come roaring back into the high single digits. According to this manipulated government statistic, the real inflation rate, as we all know, is much higher than this. So what's the difference here? Why was the inflation rate so low in the 19th century, and now it's been so high? Well, basically, we had the Federal Reserve was founded in 1913. We can see here how the dollar has been devalued by money printing and by leaving a sound money standard like the gold standard over that period of time. $1 in 1913 now basically is only worth a few dollars or a few cents. We've had a complete devaluation of the dollar, and this really contrasts with the stability of the dollar from 1789 to 1913, when a dollar at the end of the period was really worth approximately the same amount. You had very, very little inflation. If you're enjoying this video so far, I just ask you to hit the like and subscribe buttons. Maybe leave a comment as well with a question or a suggestion for a future topic. So this period, 1789 to 1913, the founding of the Federal Reserve, we basically had 124 years of basically zero inflation in the US. And as we said, over this period of time, the standard of living for the average American went up a lot. Why was this? In part, I would say it was mostly because of technology. And technology just means doing more with less. So for example, the 19th century saw the invention of the cotton gin, the industrial revolution coming to the US, factories, the light bulb, all of Edison's inventions, Tesla's inventions, etc. So the thing about technology is it's inherently deflationary. In other words, it's cheaper to send an email than to mail a letter. And this is what technology helps with. It also gives people more leisure time. For example, software and robots doing more work, automation doing more work, etc. So the real question is, why does the average American family in 2023 now need to work harder than ever before to afford basic things that previous generations, like the baby boomer generation, took for granted? How are they able to afford to have or even the silent generation before them? How was the wife or mother able to stay at home, and the husband was able to afford a nice house and a nice car, a new car every year, etc.? Did people work harder back then? I don't think so. Something has fundamentally changed. And I think it is because our life energy, the fruits of our labor, our earnings and savings have been stolen and are being stolen through taxes and inflation. One problem with inflation is you end up paying higher taxes because you get a raise, you get a salary raise that puts you into a higher tax bracket. So your wages are higher, but everything costs more too, so it's a net negative, especially when you get moved to a higher tax bracket. Inflation, you can basically define as your money buys you less stuff, in other words, less or fewer goods, services, and assets. Deflation, your money buys you more stuff, goods, services, and assets. Now, put this way, deflation actually sounds like a great thing. So the question is, why are we taught in school that it's such a bad thing? And why do we read in the mainstream media that's a bad thing? Well, the main reason is because the mainstream media really has become a megaphone for the powers that be, for the U.S. government. And then, of course, the schools are government controlled. Instead of saying public school, I always like to say government school. I think it sums up much better what you get. And I can say this even as a child of public schools. I went to public schools at first and then went to private schools. Private schools usually are government funded, and they take their cue as well from what the powers that be tell you that you need to teach. And so it makes sense that economics taught in high school and at the university and graduate level talks about deflation as being a very bad thing because these schools are basically highly influenced by government policy. What does the government have to deal with? The government has to deal with a lot of debt. Currently, the U.S. national debt, not counting all the entitlement spending that's going to need to happen and all the off-balance sheet debt, U.S. national debt is almost 32 trillion. And so deflation, when you have this much debt, deflation actually is a very dangerous thing. So we could see why we are indoctrinated in school to believe that deflation is a bad thing when it's actually a good thing for individuals and for families when your money buys you more stuff. Why is deflation a bad thing for those with lots of debt like the U.S. government? Well, let's use a personal example. Let's say that you borrow $200,000 at a 6% annual interest rate. That's $12,000 per year in interest, or approximately $1,000 per month in interest. Let's say that you currently make $60,000 per year. We're going to ignore taxes to make the calculation easy. That means you're currently paying 20% of your salary towards interest. That's just $12,000 per year in interest divided by $60,000 salary. In a truly deflationary environment, you would expect wages and salaries to move down as well. So let's say that the following year you're only making $50,000 because $50,000 salary because there's deflation. That means you're now paying 24% of your salary towards interest payments. In other words, the cost of servicing your debt has gone up, and this is the toxic cocktail of debt and deflation. By contrast, when there's inflation, the cost of servicing your debt gets easier because your wages, at least theoretically, go up every year. The working class and the middle class has been left behind, in part due to central bank policies and policies that encourage wealth inequality, like outsourcing everything to China, for example. But at least theoretically, your wages would go up every year. And this has certainly been true for the upper middle class and the wealthier people. Do you know what else goes up in price every year, though? When there's inflation, your wages may go up, but the price of food, the cost of food and gas, healthcare, rent, housing prices, etc., they all go up as well. So to summarize, inflation, good for those with lots of debt, like the U.S. government. Deflation, bad for those with lots of debt, like the U.S. government. Due to its high debt load, the U.S. government is incentivized to keep harvesting its citizens' life energy through inflation, which is a stealthy form of taxation. Really, the stupidest idea in economics is that money is only good when it loses value every year. That's another way of saying that the economy needs some inflation. You'll read these New York Times editorials by people like Paul Krugman, for example, saying that 2% inflation is good. 2% inflation is actually a terrible thing. It completely penalizes savers and it eats into your saving. So this is really one of the worst ideas, and it really is government propaganda that money is only good when it loses value every year. Now, this is something that Bitcoin fixes already today and in the future under a Bitcoin standard. And if you've been living on a Bitcoin standard and storing your savings, at least in part in Bitcoin, you have seen over over multi-year time periods, your Bitcoin should buy more and more goods and services over time. Obviously, there are bear markets in Bitcoin. You can have these large drawdowns, but even these drawdowns tend to end at a higher level than the previous high. So even right now at 23,000, we're above the previous highs of the previous cycle. So Bitcoin has the tendency to allow you to buy more and more goods and services over time. This is why people will say it's a deflationary currency, for example. It's also a deflationary currency in the sense that more and more Bitcoin get lost every year, which makes the value of the Bitcoin that are still around more valuable. So is it a bad thing that Bitcoin buys you more and more over time? No, it's actually a really good thing. In this sense, deflation is a good thing. Now, what about that personal debt that you may be holding? And a lot of Americans have a lot of debt. They've been loaded up with a lot of student debt, for example, which is part of the propaganda. Basically, you teach people worthless subjects at university, and you teach them propaganda, and you load them up with student loans. And then Wall Street is very happy about this because then they get to play games and package up the student loans, for example. And under U.S. law, you're not under U.S. bankruptcy law now, you're not even allowed to discharge student debt under if you file for bankruptcy. So this is a real travesty, and this is a real injustice towards the younger generations. So if you're holding a lot of personal debt, this is the tricky part. How are we going to make this transition from a fiat standard to a Bitcoin standard? Your debt is someone else's asset. In other words, you owe money towards your student loan, for example, and then someone else holds that loan as an income producing asset. So it's a little difficult. You could just forgive the debt. But if you do that, then it wipes the asset off of someone else's balance sheet. Now, this might not be a bad thing if it's Goldman Sachs' balance sheet, but it could also be another retiree, for example, who is just holding some income-producing bonds that are backed by student loans. So this is going to be a very messy transition. We'll probably see very high sustained inflation followed by a monetary reset or some sort of debt jubilee. It's hard to know the path, but these are the two main forces, the competing forces in the world today. Technology continues to make everything less expensive every year. Computers get more powerful. We have Moore's Law, and we also have automation and various forms of technology that allow people to live longer and allow people to do more with less. On the other hand, central banks and their monetary policy and their money printers make everything more expensive every year. So these are the two competing forces: technology trying to make things cheaper, central banks trying to make things more expensive in order to cause some inflation and allow the US government and other governments to service their debt. If you haven't read it already, Jeff Booth has a great book called The Price of Tomorrow, which I'm borrowing a lot from in this summary. If Bitcoin wins, it destroys the current debt-based system, and it will usher in an era of abundance where technology is freed to continue to lower prices without central banks ruining everything. In fact, it might look a lot like the 19th century, like 19th century America, which was on a sound money standard, and we saw very low inflation. We almost saw deflation at times, but everything seemed to even itself out. So this is what I'm hopeful for. This is one reason I hope that we can move to a Bitcoin standard during my lifetime. I think it will bring general prosperity to working class, middle class, and upper class people, and it will lead us to a much more fair system, simply because everything will be grounded, rather than being grounded on debt and built on debt where you need to constantly be inflating your way out of the debt. It'll be built on a sound foundation of a Bitcoin standard. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.